What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the technicals on what we're seeing today on AMC. We are dangerously close to a 1348 cross on the 4-hour time frame right now. The last time that we saw this happen to the upside, we saw some pretty significant boom candles start to fire off, which was really fun to see the last time we saw that happen. In addition to this, we do have all-time high shares on loan for AMC right now, which is a wild thing to be seeing. So we're going to break that down as well. We're going to be talking about some of the GameStop numbers too, but we were getting a lot of questions today on the live stream about this situation with Melvin Capital closing their fund for good, returning money to the investors, whatever's left of that money, and what's going to happen with their potential short positions and what effect could we see on both AMC and GameStop, because they both typically trade together, if Melvin were to cover a boatload of their short positions. Now, there's two kind of things that we have to kind of take a note of here. There's two different scenarios. It's either Melvin still has shorts or Melvin still doesn't have shorts. So we're going to go over these scenarios and kind of break this down for you guys going into the next couple of weeks before we are going to see Melvin fully close their fund, and how Ken Griffin's Citadel has essentially margin called Melvin Capital completely into bankruptcy. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you were seeing all the success that I was having today with the 1348 trading strategy on the live stream. You've seen the success that our members have been having with it. If you do want to come check it out, get all of that training, the education that you need to come be a successful trader, make sure you check out that link down below in the description. So AMC closed the day today at $13.08, up 32 cents on the day, about 2.5%. Very solid day, down very slightly in the after hours right here. Pretty choppy price action, but overall a solid green day. Now, when we come over to the 4-hour time frame here, again, we're dangerously close to that 4-hour cross right here with the 1348. The last time that we saw this, we went from $12.90 to about $34 a share before that nonsense halt. And again, for me personally, I'm waiting till we end up getting over that 200 EMA to really start getting some of these call contracts again. But we are looking pretty good right now, and we could be in for somewhat of a reversal in overall price action. Now, when we come over to the Ortex data right here, the one thing that I really want to key in on is this 159 million shares on loan. That's 30.91% of the overall free float. That's absolutely insane. We have 21.88% estimated short interest. But comparatively, when the last time we were hitting shares on loan and the cost to borrow was much higher than this is a little bit strange right here. We are still kind of in the beginning phases of seeing these shares on loan really start to spike up. So we could see that cost to borrow increase start to come over the next week or so. But again, this all-time high shares on loan is going to come down a little bit after today's 1.45 million shares were returned. We also have 21.88% estimated short interest at the current time on AMC. Now, coming over to GameStop right here, so we have 24.6% estimated short interest, 13.91% average cost to borrow, and 27.6% max. Those are some pretty insane numbers over here, and GameStop's been seeing some pretty aggressive price action as well. So these two stocks are looking pretty good right now. We are going to need to see the overall market relax and start to trend back to the upside. Who knows when we are going to see that type of price action, but once it does, that's when we could really see these two stocks start to fire off. Now, let's get into this Melvin situation right now. So if you guys did not know, in the beginning of this year, Melvin Capital sent out a notice that said we are changing to become a long-only fund, meaning they are only going to be betting with stocks that stocks are going to go up. Now, here's kind of where the gray area comes. You either have to say that you believe what Melvin Capital is saying, that they are no longer shorting stocks, or you don't, and you still think that they are. That's not really for me to decide. That's for you individually to decide whether or not you think that Melvin Capital was going long on stocks or if they're going short. In my opinion right now, this is just me personally, if they were still shorting stocks, the percentage of their portfolio that they were short was very small, because if you look at the market for basically all of 2022, it's been down significantly. And when we go over what we're going to talk about with Ken Griffin basically pulling money out, Melvin Capital basically only having long positions, it would make sense that the reason why they're shuttering their fund is because they were long on a lot of stocks. But If they are still holding some of these GameStop short positions, which is possible, it's always possible to have that happen, then I would expect to see some pretty aggressive price action to the upside. But right here, Melvin Capital hedge fund, torpedoed by the GameStop frenzy, is shutting down. The firm lost billions of dollars as it scrambled to cover its bets against the video game retailer that became the darling of retail traders. Melvin Capital, the hedge fund run by Gabe Plotkin that struggled with heavy losses last year as it reeled from wrong way bets on GameStop, is shutting down, according to a letter sent to investors on Wednesday that was received by the New York Times. So this is a little bit of a different scenario that we were talking about before, the previous letter that Melvin and Gabe had sent out to their investors. Now, previously, the goal that Gabe Plotkin had was to kind of return the money, and then whoever wanted to come back into a fund with him would be able to. But if you're Gabe Plotkin and Melvin Capital, how in the world are you going to convince high net worth individuals to give you even more money if your track record over the last 2 years was absolutely abysmal? It makes no sense. Now, here's kind of where things get a little bit interesting. So Ken Griffin had an interview today on Bloomberg, and he made some pretty interesting comments. One in particular kind of stood out to me. This one right here. Griffin says he didn't speak to Plotkin ahead of the Melvin shutdown. Now, this could be another one of those Ken Griffin lied scandals that when he was talking in front of Congress, everybody freaks out. Everybody thinks that he lied with some decent evidence that he actually did. But this is a little bit different here. When we come over to this article, Citadel is further paring back $2 billion Melvin investment. Now, this was actually in February. At this point, Ken Griffin doesn't actually need to be talking to Melvin Capital or Gabe Plotkin to do very, very significant damage. Think about this right here. So Citadel in point 72, Steve Cohen's fund, gave Melvin Capital a boatload of money essentially to stay afloat back in January of 2021. Now, if they were not able, which they were not, to essentially get back some of those losses, close out some of those short positions, really kind of get themselves back on the right track and give back Citadel and point 72 their money with a little bit of return, when Citadel comes in and point 72 come in and say, give me my money back, this is way worse than a margin call, because we've seen this many times in the past, especially with Bill Huang recently, that these big banks are calling these financial institutions up, these money managers, and saying, hey, we need our money back right now. And they essentially say, yeah, no thanks. We're not actually going to give you any money back right now. We actually want more leverage. When Ken Griffin calls you and says, hey, give me my money, you're probably going to give him his money. So what Ken Griffin essentially did was bankrupt Melvin Capital himself. And think about this, Citadel is not the only institution that Melvin Capital was taking loans from. There's other prime brokers, other levered positions that they had that were all going against them. So when Citadel and point 72 come out and say, give us our money back, that kind of started that domino topple of Melvin closing. So in this situation, it's basically 1 or 2 down and many to go. So that is mainly going to wrap up this update on AMC in this Melvin Capital situation that we have coming up. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one.